Traders, in this BrickWick training video, we're going to look again at a beautiful trade setup. This is a double bottom right here. So with our classic DST double bottom thought process, I'm going to do one of two things. I'm going to take a one lot and I'm going to try to trade the momentum on a break below with a sell stop right there. So basically I know that this is a significant swing low in price. The thought process is that if the market breaks below and closes below, then we should get another directional move. There it is right there. Now, this is a scalp. I'm going to take my 72 right there. Okay, this is the bar counter. Take the 72 and add 4. I'm going to go to 76. So right now from 64 to 76, I'm risking 12. From 64 to 56, my reward is 8. So I've got a slightly inverted risk-reward ratio. And then I'm going to add using a different ATM. So if the market pops here, I'm going to go 89.72 minus 3, and I'm going to sell 1 at 69. So I've got a momentum break below, close below with the direction of the underlying trend. Number 2, if I get filled, then I'm going to sell a retracement trade inside of that. Now, obviously, if this is a reversal and it's a fake out to the sell side, we'll go here, pop up, get me filled, and then we could reverse right here for a loss. If it's really good momentum, it'll drive directly into my 10-tick target for a $100 winner. And if we go slowly through, pop back up, then roll back over, then I take profits on both contracts using the momentum entry and then using a bit of an adverse excursion entry, which is setting right here at the 89.70. Now I'm going to pull it down. Minus 3, so it'll be 67, and I'll do this until the target is hit or until I'm filled. We're at 1 times initial. I'm going to speed it up. We'll go to 3 or 4 times so you can see the price action. Again, all we're doing is replaying the live data that I've stored on my hard drive as it's come into my machine. So these are the exact ticks that I pulled in from the exchange, and there's target filled. Now we've got a nice new structure low, so we just made a quick $100. My retracement strategy would have trailed my retracement down here, gotten us filled on this little retracement pop right there for another potential winner. All right, so here we are. We're at 60s, so I'm going to go to 66 on the stop. See if we roll back over and get another directional move. So great example right there. That's the momentum trade, followed by the adverse excursion add-on. Our momentum trade went and attained target prior to the retracement trade getting filled. There's a quick hit for $100 on just the momentum scalper entry. All right, traders, now here's an interesting setup. I'm still at 4 times the initial. So what I want you to recognize is right here how to use the swing ID to identify directional movement. Now, if I'm a more aggressive reversal trader, I can go ahead and take the buy above the swing high right here. But I want you to notice that right now I've got a swing low in at 89.48. That's the horizontal line right here. I've got a swing high in right here at 987. So the more conservative trader is going to wait for price to break above, close above, pull back down here, and then trade that reversal signal. So right now, swing high, resistance, 987, swing low support, 948. So a 40-cent window right there in crude oil. Let's go ahead and kick it back up. We'll kick it into about 6 to 8 times normal speed. Okay, now here's a double top. Let's pause that real quickly. This is a beautiful signal. So we've got a bear continuation pattern. Now again, we want to go in and we want to identify this is a new structure low, followed by the anticipated lower high. The lower high does not trade back above the prior swing high. So with this, we go here, pull back, and that puts in a double top in a bear continuation pattern. So it's a bear market. Number 1, I've got more black candles than green, bearish. Number 2, we just made a new structure low convincingly. We broke the previous swing lows at 966 by a full 17, 18 ticks. Number 3, our previous swing high is still intact. So here's a little double top right there, looking at the bear continuation pattern. Now what I'm going to do is I'm going to come in and I'm going to take the low right here that exists. I'm going to subtract 2 ticks and place my sell stop right there. So I'm looking for a retracement. I see a sign of weakness in the retracement, meaning that we could see a further continuation of the sell-off. So I'm going to look at this high to low move right there, possibly occurring again right here. So the best way to benefit, if I sold them right here and the market continued to go higher, then I'm going to get taken out on a stop. The double top right here shows me that there's a bit of weakness. They didn't have the ability to trade above this 89.77 right here. Thus, I'm going to require that we break below the swing low. This is the favorable excursion trade on the BrickWick bars. Okay, so let's kick it back in. We'll take it up to 3 times. Let's see if we get filled. ATM automatically places my stops and targets. I'm going to pull this target down here, looking for a move down to an almost 1-to-1 ratio. Now that we're in, I'll kick it up a little faster, 6 times. There's a nice directional move. Now, with that move, I'm trailing my stops. So we've only got 3 ticks worth of risk in the trade. And yet, obviously, from our entry at 63, we've got 22 ticks of opportunity. Now, again, typically, if the market takes out this swing low in a nice directional move, we get a very fast move. I'm going to trail my stops again. I'm going to go 61, locking in some profits. There we go to 41s, 48, 47s. There's my 89.57 showing me where the BrickWick will turn. So a print of 89.58 gives me a green bar. There's new lows at 44. Now I want to get very aggressive on my stops. And there's the target filled. So 2 beautiful moves in this particular setup. Great example right there of the impulse move. Let's do a trade below, break below, the momentum. And then in a bear continuation pattern, we've just taken a look at a classic favorable excursion trade. The double top here goes from black to green, and then as it's plotting black up here and pulling back, we placed our sell stop for entry. So the entry was based on a sell stop. Let's take a look at it real quickly. A, we got a double top inside of a bear continuation pattern. B, we recognize the double top right here on our BrickWick chart. C, we took the swing low that existed between this double top right there and we subtracted 3 ticks. So swing low minus, actually it was 2 ticks, and then the entry is to use a sell stop for entry. Now, one of the downsides to using this sell stop is we could get slippage on the fill. Depends on how thick the market is. So if it's a market that has more volume, then we may not get any slippage. S&P, NASDAQ. On crude oil or a fast-moving market like the mini Russell, there may be some slippage. So we might expect 1 tick slippage on every trade. Sometimes in a fast-moving market, it could be 2 and 3 ticks. Once we're entered on our sell stop, then the ATM that we used placed the protective stop. The ATM places the profit target. And in that particular case, we got aggressive. We used a 1-to-1 measured move right here to identify a target. Although we didn't have to do it that way, we could easily have just trailed our stop at this right here, use the bar counter plus 3 or 4 ticks, and that's where it'll get the reversal. Now let's just take a quick look here and see what would have happened. We'll go ahead and kick the replay back in. We're at 3 times normal speed. We'll take this guy right here, move it sideways, and then act as though we would have had that at 46. And you can see right there, we would have been taken out on our stops at 46. Remember, we got short up here at 63. So that still would have been a nice 17-tick winner. So recognition, bear continuation pattern. Remember, black bars at a 2-to-1 ratio or higher on the way down. Number two, we looked at a MOMO trade, a momentum sell signal there for a quick hit for a $100 winner. We then saw this rally inside of the bear move. We didn't trade above our previous swing. Our pattern recognition helped us realize that we had a double top in a bear move. Our favorable excursion means we took our sell stop, placed it here for entry, requiring the market break below that double bottom, and then drove right down into our targets. So really nicely done right there. More follow through on crude oil, and just on those two signals with trend, one momentum and one favorable excursion, a little over $270. We'll see you at the next trading video.